Hey, I'm Charting Man Dan, technical analysis mentor with the Chart Guys for the last 8 years. And in this video, we're going to check in on the markets. We didn't get the NASDAQ volatility I was looking for today, but a very similar tightening daily range is shaping up to something just a month ago. I ended up with a quick losing trade as the dollar is giving some red flags in the setups I've been keeping an eye on. Let's check in on the charts. So checking in on the S&P 500 futures chart to start, we have the 12-hour tightening range, and that's where I'm finding the clarity. So that's the time frame that I'm going to be looking at for the next couple of days until this range resolves itself. And if you've been watching over the last couple of weeks, you know we've been watching a pattern where we have a resistance level, we reject from it, and then we bull flag and break bullish. That's happened a number of times, and it is what has set up a number of bullish entries for me. And at this point in time, the S&P 500 is potentially doing that. If we were red tomorrow, then that would just have us looking at this as a standard equilibrium. And we'd then look for the higher low and the tightening range, potentially into Thursday, which is Amazon and Apple earnings, which is going to be the next factor as far as fundamentals that move the market significantly. The NASDAQ, we were watching this 4-hour sideways range. It broke bearish, but no real follow through at this point. And look at the similarities here of this pattern back here and this pattern here. The difference is time. It was a longer pattern with a wider percentage, but we pulled back. We bounced and set the lower high. We came back and set a higher low right around EMA 12, and then we saw a new leg up. And here we go. Pull back, bounce and set a lower high. Now we're pulling back, trying to hold EMA 12. Is the same thing going to happen? We'll have to see. Again, it's the NASDAQ, so obviously Amazon and Apple earnings on Thursday will play a major part in how we break here, but at the moment it's a tightening range. And I'm using the futures chart just because there's a little bit more data, but if you look at QQQ, it's just a standard equilibrium. High, higher low, lower high, and now we're looking for the bulls to try and form a higher low, and there are no red flags at this point. And again, just keep it simple. The daily uptrend is our guide. Semiconductors also broke the low of yesterday. No significant bear follow through. Anything above 152.95 is a daily higher low. The bulls have a lot of space to work with. In the video yesterday, I did draw this potential rising wedge that we're going to keep an eye on, but we know rising wedges do break bull in bull markets. So this is just a visual guide. Personally, I would not be acting on this. And we'll see how it breaks. No red flags on the daily consolidation as NVDA does the same. Pullback, but scouting a daily higher low, tightening daily range forming. And look at the last time this happened. Again, doesn't mean we're going to break bull, but we have to give the probability to the bulls because that's what our prevailing trend is. That's the direction momentum is going. Was it Newton that said objects in motion remain in motion? Well, that's what a trend is. So, tightening range, lower high, higher low, lower high, higher low. Do we see that same thing happen? As I mentioned, I was expecting more volatility in the NASDAQ today, but now that we've got the tightening daily range, that just has me zoom out and say, all right, we broke the 4-hour, but we've got to break the daily range if we're going to see the volatility pick up. And the VIX is showing us sideways. Chinese names started some daily consolidation today. Baba broke the low of yesterday after a strong close. Tons of space for a daily higher low to form. We're going to keep an eye out to see if we get to hourly oversold conditions. We know that the bulls want to see hourly oversold mark a daily higher low if the uptrend is going to remain strong. Some other sectors in the Chinese sector pulled back a bit more significantly. But again, we just ran very significantly over the last handful of days. So after a double-digit percentage move, pulling back and looking for a daily higher low to form, and we'll see if the bulls are able to maintain the daily uptrend. K-Web, another one. So starting to see the daily pullback and looking for daily higher lows. Healthcare continues to be a weaker major sector. The weekly consolidation. Again, we're going to watch our retracement size. The bears want to see over 50% retracement. And we are approaching 50% retracement right now. And still a weekly uptrend. And I would still consider this a daily uptrend. If you go to the 2-day time frame, smooth it out a little bit, you can see it was a big bull move up, now a pullback. And we would have to see the bears confirm a 2-day downtrend if they were going to start taking over in a more meaningful way. If Financial sector, uneventful today, just sideways, still holding daily EMA 12. This is a daily bull flag unless the bears prove us otherwise. Simple statement is if $35 is support, it's a bull flag. Very minimal retracement, sideways for 3 days. Again, no red flags. Ever since the FOMC, ever since that Thursday big drop, I'm looking for the bears. I'm scouting those bears. Show me something. Show me all major sectors at the lows. We saw it Thursday. That was a good signal for a couple hours in the afternoon, but no follow through, and just haven't seen any red flags since then. Look at the NASDAQ today. Look at QQQ. And I did not have clarity today. I did not do a lot of trading. I'll talk about a trade I stopped out on as the metal bulls are getting some red flags in the short term, but I didn't have clarity because the NASDAQ was just all over the place. We had a pullback and then the high of the day. We confirmed a 5-minute uptrend straight into a dump. But one thing that keeps standing out in this bull market is I keep saying anytime there's a big dump, I just remind everybody in the chat room, remember, we have to confirm the 5-minute downtrend if this move is going to have follow through. It's a very simple statement. It's easy to forget. You see the big drop, you see the volume, and you say, aha, that's it. We're about to roll over. We're about to see weekly consolidation. And we don't even confirm the 5-minute downtrend. And as soon as you bounce over 50% retracement, that downtrend then becomes a lot less likely. So look at the periods where the bears had control here. Pullback, V-shape to a higher high. Solid pullback. It was a tight little equilibrium that broke bear. V-shape to the higher high. Solid pullback, V-shape to the higher high. Every solid pullback was met with a 50% plus and pretty much 100% plus retracement. We never confirmed a downtrend in any meaningful way. After the drop, you've got to, just look at Thursday. You want an example? Here's the bears showing up. 5-minute lower high, lower low. Bear flag confirmed, bear flag confirmed, bear flag confirmed. That's a lower high and lower low 6 times in a row or whatever it was. Be skeptical of the counter trend direction. Make them prove it to you. You can position for it. I positioned for this potential rising wedge into the end of the day. And it ended up being an uneventful trade. It played out, but by the time the bell rang, insignificant gains. But just a low risk attempt. Just keep those attempts low risk if you're looking bearish, because the overall market is still holding on strong. IWM still struggling at the long-term multiple or 14-month resistances, 198.74. High of today, 198, or high of yesterday, 198. That's the high of yesterday. 198.75 by the penny. Drop today. Again, look at the 15-minute. Oh my goodness, the bears. From the high of the day, straight drop. Can they confirm a downtrend? No, they cannot. Recovery all afternoon. This is the hallmark of what this market has been for the last 4 months. The drops see grinds back up with no bear follow through. And so the daily is still strong here, and the bulls are going to try and give it another chance. IWM bulls have complete control as long as EMA 12 is support on the daily. ARKK, pullback, tightening daily range similar to the NASDAQ. Anything above 46.67 is a daily high or low. We'll see if the bulls are able to break. Again, this is the definition of a cup and handle, just in the sense that you reject from resistance. It's a prevailing uptrend. And if you bull flag and break both resistance levels, there's not a lot of resistance immediately nearby. A lot of people draw cup and handles coming off of downtrends, like right here. And it's just a much better continuation pattern, because if you confirm it here, you've got all this resistance. Whereas you want to see a continuation cup and handle where there's no resistance nearby, which is why you get the breakout following the bull break. And this wasn't an ideal example of the cup and handle, because you want the right side of the cup to be lower than the left, but very similar. AI, lead bulls today. So at one point this morning, my entire screen was red. Everything, all sectors, everything was red. Not by a lot, but small amounts. And AI and PLTR stand out as strong still. And AI just got to the highest level that we've seen in over a month. And we've been seeing a lot of volatility in both directions. You look at this drop here, down 14%, up 19, down 14, up 17, down 13, up 18. That's a wild amount of volatility. But what's the pattern there? Higher lows and higher highs. Yes, you can say the higher highs lacked follow through, but this candle is different. Let's see how it plays out. But every bull break that we've seen prior was a red candle, and today was a strong close. So we're looking up at limited resistance here, and if the NASDAQ forms a daily high or low, then AI bulls are positioned very well to look to try and head back to the recent highs. Next resistance, 44.16. We already broke it. So 46.88. Really just two levels until the recent high. And space for an hourly high or low on consolidation. So I already know heading into tomorrow, the next time AI consolidates, I'm scouting an hourly high or low. It's a potential trade setup that I'm going to be watching tomorrow for a day trade. Maybe it's 5-minute oversold conditions where the back burner aligns with the hourly high or low. But that's something to be watching for. PLTR, grinding here up around 20 psychological. Still holding very firm, very strong, looking for the daily high or low. On any pullback, still an hourly uptrend, but a battle is going on at 20 psychological. And just a little rotation. PLTR was a lead bull yesterday compared to AI in a big way. Up 11% yesterday. Today, less than 1%. And you just see rotation going on in healthy bull sectors, where yesterday AI was 6%, almost half of PLTR, but today it was 5 times the percentage of PLTR. It's just rotation. The crypto stocks do the same thing. Yesterday, MARA was stronger. Today, Riot was stronger. And what was notable today is Bitcoin broke daily support and V-shaped bounced to essentially make it a bear break with zero follow through. So it is keeping the weekly bull flag in play for Riot and MARA. Coin has earnings on Thursday, I believe. But the same thing, another big bounce. I know I'm scouting Riot for an hourly higher low tomorrow. So it just depends on how we shape up. If we open higher, I know I have to be patient for that hourly consolidation. If we open lower, I know that hourly higher low is going to form sooner rather than later, if it is going to form. Cannabis names pulling back. Now the big question is, was this bull move just end of month balancing and shorts? We know the sector is loaded with shorts, but were they just covering some position before taking back over again? And so, as I mentioned yesterday, what I care most about is when the daily pullback starts, do we set the higher low and higher high? That will be very meaningful, because if we don't, if it's just the bull move and then slow fade, it's the exact opposite. So ready, this concept that we just talked about in the NASDAQ, 5-minute time frame. You dump, you're in a prevailing bull market. You dump and you don't confirm the downtrend. This is the exact opposite, what the cannabis sector has been doing, where because you're in a prevailing bear market for this sector, you get the huge move. Do you confirm the trend or you just give it back? I mean, it's the inverse of that IWM chart that we just looked at. This is the daily chart for TLRY. IWM on the 15-minute was the exact opposite, because one is a bull market and the other is clearly a bear market. So must confirm the daily uptrend in the cannabis space. MNMD talked about that yesterday, still hanging out right near the high. A little bit of a double top. Is this a cup and handle? It's possible. That's a 4-hour cup and handle. The burden is on bears to prove to me that that is not a cup and handle. It's a double top by 1 penny. If 472 holds, we're going to break to a higher high. If we lose 472 support, the low of today, then that would negate the cup and handle for me. But going to be watching closely over the next 2 days to see how it plays out. So red flag for the metal bulls was dollar strength. And what I needed to see was the dollar bulls confirm the daily uptrend right into daily consolidation. And that obviously did not happen. And the bulls kept a good bit of control today and overnight. And as I mentioned yesterday, the metals held up well compared to the dollar being green, but that can only last so long. If the dollar keeps going up, it's going to be putting downward pressure on commodities. And so the dollar is still looking for a weekly lower high. And I keep talking about the gold cup and handle monthly pattern that may lead to all-time highs. What would ruin that setup would be the dollar setting a 4-month higher low. If the dollar sets a 4-month higher low, it's not going to be a gold cup and handle. So what would be the first indication that a 4-month higher low is forming? A weekly uptrend. We had a big bounce here. That was enough space to confirm an uptrend, but the bulls failed and we rolled over. Now we're doing it again. Anything under 103.57 is a weekly lower high, but it is a big enough bounce to try and shape up a weekly trend change whenever we top out. And if we confirm the weekly uptrend, the probability that a 4-month higher low is forming will increase a good bit. And so with the metals stopped out of my NUGT swing trade from yesterday, because my mindset was that's either the weekly higher low or I'm wrong, and I was wrong. Big turnaround. I mean, from the high of yesterday to the low of today, granted it's 2 times leverage, but almost a 10% drop. And so, I had one thing that I struggle with psychologically is balancing my day trading style with swing trading. And there are plenty of times where I apply my day trading to my swing trading and I take profit too quickly based on shorter term time frames rather than letting the move ride. And of course, in this instance, I was up 3% from my entry yesterday. I'm sitting there looking. I know we're rejecting from resistance. I know we're due for hourly consolidation. This was going through my head yesterday afternoon. I can sell half and have my break even at 35.95 and be in full control of this trade, very comfortable. Or I can try and let the whole position ride out, knowing that if this is the weekly high or low, I want that whole position. And so I decided to just let it play out. And in the end, that gave me a day loser as opposed to giving me, maybe a third of a day loser or something much less. So metals are not ready for weekly higher lows just yet. Still going to be watching for it, but dollar too strong. And so gold, still going to watch for a weekly higher low, anything above 1893, but no sign that it is shaping up just yet. Oil still all bulls, stair-step pattern for the last 7 days, 8 days, and we're just watching for a break of that pattern, and then we'll scout the daily higher low, watching to see if EMA 12 continues to hold as support. And natural gas, still red flags for the bulls. First red flag was on Wednesday the 26th. And we are in a daily downtrend again, heading back to the recent low of consolidation. Burden is on bulls to prove to us a daily uptrend. We have not confirmed a daily uptrend on natural gas since we topped out in the 280s. So other than that, stop out of the metals has me return to patiently waiting and observing to see if weekly higher lows are shaping up. That was my more aggressive attempt yesterday. Other than that, I know that as long as the NASDAQ is remaining within this tightening range, the volatility can drop off a bit. That said, there's still plenty of volatility in our volatile names like AI, PLTR, Riot. I mean, Riot today dropped 8% and bounced 8% or something like that. So these individual names do still have plenty of day trading volatility, but as far as the market as a whole and the major players, patient and waiting for the daily to break. Meta, 4-hour equilibrium we talked about yesterday. Higher low is set, tightening up beautifully. It's just a really nice equilibrium. We knew the higher low compared to 309.84 was most likely. The bulls showed us some relative strength on the morning. Tesla is tightening up. It was a lead bear today. Tesla bulls must hold 255 if this tightening range is going to continue to tighten up. And so that's something to be watching for tomorrow. And it's similar because Meta was a lead bear yesterday and then set the 4-hour higher low, which was the most likely scenario, and turned into a lead bull today. Tesla, a lead bear today. Do we see an hourly oversold bounce holding 255 and shaping up a daily higher low to have it turn into a lead bull yesterday? Maybe. That's something I'm going to be observing and watching to see. But a nice tightening range here. The big difference is, look at the Meta tightening range, and it's favoring the bulls because, again, the prevailing trend. We got higher lows. We're coming, we're at the highest level in years Whereas Tesla is in equilibrium, a tightening range that is favoring the bears, just because it's lower highs and after a bearish earnings reaction. And we're potentially seeing the first bear cross of these EMAs, EMA 12 and 26, potentially the first bear cross in 3 months. It's only going to happen if we break bearish from this pattern, but the simple statement would be Tesla bears are positioned well if the NASDAQ sees any meaningful weakness. Meta bulls are positioned well if the NASDAQ sets the daily high or low and heads back to 52-week highs. So again, the way that I trade is I try and identify individual names on each team, some on team bull, some on team bear, and then let the broader market dictate which ones I focus on. All right, do good things. Thanks for the likes and shares and stuff.
Owen's. Super cool on the head, right? You never use your handle again.
They sell pepper rice, and there's like a dish that comes with what's like kind of pricey.
I'm not gonna give you food. We've got too many witnesses.